Well, g'day there, traders and friends, market participants, and enthusiasts right around the world. You are here with James on behalf of Pivot Point Trading. What I'd like to do for you now on this Thursday afternoon is talk about the current state of the financial markets. As I sit down and bring you this recording, we have roughly about 2 hours, maybe even 90 minutes until we see the close of trade on Thursday. And as you can see in the top right-hand corner of my screen, you can see the Dow Jones Industrial Average during Thursday's session has pushed above over 100 points to the upside. It has pulled back a little bit. It's sitting at 99.9. Now, I have been receiving, really inundated with a lot of emails coming in asking, what do I do? What do I do with a lot of these open positions when it comes to the industrial average, when it comes to the S&P, even the NASDAQ? The NASDAQ is one of the actual ETF trades that we were triggered into last Friday. And again, you can see on my screen, 6,483 was that original breakout entry. You can see since this entry, it has just been consecutively day after day of rising prices. This is working out tremendously profitable, favorably for us. And again, what I'm noticing with these emails collectively, again, let me just show you this in the industrial average. We've had really since mid-September, 3 entries, 22,000, 22,292, and 22,444 was the most recent one, which triggered on Monday. But again, I guess the undertone of these emails with it is essentially, first of all, a sense of gratefulness, first of all, to be in these positions and to have them reflecting the way in which they do, which is fantastic. And it makes me proud and very humble, again, as we sit down and break down these financial markets. But also, there's an element of, I guess, the fear of missing out on some of these parabolic rises. What I'm essentially saying is that I'm receiving a lot of emails as to whether or not people should be overextending themselves and potentially chasing additional trades on top of the hit list that we have moved through over the past 1 to 2 months of just, some pretty decent trade opportunities that have made a lot of people very happy. Now, the reason for this video is because, again, once I understand, I guess, the sentiment of people emailing me personally and asking, hey, should I take this trade? What should I do with these profits? I mean, how far is this market set to go? You need to sit back again a little bit logically, so to speak, and a little bit more rationally and understand that, look, there is an element, a human element, an emotional element, which is creeping in and most likely affecting your current trading positions at the moment, those that you're looking or prospective trading opportunities, and also the real-time reflection of those open orders in your account. It's a very good opportunity now. You've got, again, 90 minutes or so before we see the close of trade on Thursday to actually begin unwinding some of those positions. Now, I'm not talking directly to anyone in particular. This is more so, again, a very general sort of breakdown of the financial markets. But when you see financial markets move as aggressively as they have really since Thursday last week, that was really where we started to see the actual grit to the market begin to take off, and it has continued right through to Thursday's trade. You need to understand that this is essentially, it's unsustainable. It really is unsustainable. And again, it's not to say that, look, the long-term trend of this market isn't going to continue. It's just to say, look, if you're sitting pretty in a lot of individual positions, if you've got open exposure to the diamonds, if you have open exposure to the SPYs, if you're trading the Qs, again, a pretty decent trade over the past 6 trading sessions. As we draw close to the end of the first week for the month of October 2017, there isn't necessarily, a warning or a major signal to suggest that this is going to stop. But at the same time, it wouldn't surprise me to see this picture change come tomorrow. And what I mean by change is that we should start to see people essentially taking some of those profits. And it is very important in the world of technical trading, in the world of financial markets, to realize some of those profits, as you continue to make them. I'm not suggesting whatsoever that you need to close out 100% of those bullish trades. I'm not suggesting that you need to close out 100% of your ETF trades on the markets themselves. But what I am suggesting is to sort of refrain from becoming too greedy, to thinking that this is going to continue forever, because simply it's not. And as I sit down and record this, the market is giving you a fantastic opportunity to take a little bit of those open positions. I'm not sure what percentage it is for you, but as I sit down and do this recording, I've just done this for myself, to take off a portion, a percentage of those positions, bank it, be happy with it, realize the profit, and then of course you can let the remaining positions, run. And what that opens up, of course, is for the market to pull back, for you to hold on to those existing positions, and then even potentially at a later date, think about re-entering when the time is right. Right now, again, these markets, the move that we're seeing into the month of October to begin, are largely unsustainable. This isn't going to continue for all that much longer with the type of, I guess, bullish angle to this breakout. This is unsustainable. I want you to be aware of this. And again, it's trying to sort of disconnect emotionally from the market, the tendencies, the human nature, the human emotions of both greed and fear. And again, to bank some of these profits, to realize some of these profits and say to yourself, really, congratulations on placing some of these trades. But now's the time to start taking a portion of those positions off the table. Again, just to reiterate, it's not going to come as a surprise if we see on Friday or even early next week to see this market at least, at a minimum, slow down. I'm not talking about a reversal, but at a minimum to see this more or less stagnate pretty much where we're currently trading at. On the Dow Jones Industrial Average, 22,761. On the S&P 500, 2,550. Again, somewhat of a psychological round number. The NASDAQ, I can see this running a little bit further. One, because it was the last of the three major markets to break out. Also, because a lot of the tech companies are only starting their wave rotations from some of their areas of macro support. If you pay attention on my screen, Google has got further to run. I've been talking about this 1,000 figure on Google. It's only a matter of time until we close this open window. If I not fast forward, but if I move up my chart also to Amazon, we've been toying with these entries for a number of time or on a number of occasions now, and it looks as though this is the major rotation which is about to really begin. So I can see the NASDAQ essentially continuing its bullish theme, not as aggressively as what it currently is doing, but if we are to see a little bit of weakness in the Dow and the S&P, I think the NASDAQ will be the one of the three markets which may shake that and continue to run a little bit further, all right? We have Netflix today. I mean, it's quite interesting because pre-market, I put out a video, actually yesterday afternoon, I put out a market referencing Netflix and talking about how important it is to think about this 190 pivot on this particular screen. I spoke about the multiple retests of resistance and how we have just placed in enough structure on the downside to say that, look, we have a compelling short if we break below 174. Now, fast forward to today's session on Thursday, and we're once again breaking up into new all-time highs. So Netflix, made it, first of all, to our pivot here at 190 a lot sooner than what I envisioned it. We're here. It's a little bit, irrespective of, I guess, the timing of it, we're back up in this location. And again, it's on the precipice of breaking out. I wouldn't be chasing this at the moment at 192.94. I think we need to, of course, at least hit our head into resistance like we have done in Goldman Sachs on Tuesday and Wednesday before we see the legitimate breakout, okay? But as I go through this list, a lot of these stocks are continuing. A lot of these stocks have been incredibly profitable for a lot of people, and I just want to congratulate you on that. But at the same time, when it comes most importantly to the industrial average, when it comes to that of the S&P 500, think about, for your own sake, realizing some of those profits. It's very important that you do so, and that in a sense you reward yourself for timing the market, for applying the technicals correctly, and then, of course, reaping the benefits of those good habits. And really, that is, I guess, the narrative and the theme and the message that I wanted to sort of impart on you as we draw to a close on Thursday. I wouldn't recommend chasing individual trades at this particular juncture. The train has left the station, so to speak. You should be thinking about a slight market sideways move, if not a little bit of a correction. That correction is most likely going to be in the format of that of a bull flag, something along those lines. Who knows? I will keep you updated as it begins to set up, nor that we have at this current juncture any signals or any chart patterns, any short-term chart patterns, which is in a sense backing up or giving what I'm talking about any foundation at this particular point. But I'm sure that it will very, very soon. And it wouldn't surprise me to see this occur as soon as tomorrow or even into the first half of next week. And it's very important that you understand that and get in check again with your own human emotions, because I imagine a lot of people right now are sitting in front of your screens. Who knows, maybe you've got your smartphone open, you're constantly refreshing some of those real-time position P&Ls, and you're quite excited. And yes, you should be. Of course you should. But at the same time, you should be thinking about realizing some of those profits at a minimum as well. So On that note, everyone, I wish you an enjoyable Thursday evening. Please, if you have any questions, email me, success@pivotpoint-trading.com. I wish you all a splendid day's worth of trading for tomorrow, being Friday. And I look forward to sitting down with you over the weekend and bringing you this weekend's pro analysis class. A lot to catch up on, a lot to speak about, and also forward looking into the second week of October 2017. All the best, everyone. It's James signing off on behalf of Pivot Point Trading. Goodbye.